accounting? This is one of important question. They'll ask you what is the objective of accounting is. First one is to maintain the accounting records. Second one, to calculate the results of operations. What do you mean by operations here means it is nothing but business. When you are running a business, to know the profit or loss, for that you will prepare an account. Next one, if you prepare accountancy, what you'll understand? Financial position of the business. Financial position of the business means what? Whether the business is running in profit or whether the business is running in losses. Second one, if you prepare accounting, the information will be useful to all users. All users means who are the users here? Yesterday we have discussed, no? Like employees are interested, owners are interested, okay? And the competitors are interested. So for all of them, we have to prepare. So in the exam, if they ask you what are the objectives of accounting, to maintain accounting reserve, to calculate result of operations, to ascertain financial position, and next one is to communicate information to users. Okay. And next one is, what are the functions of financial accounting? Now, suppose if they ask this, what are the functions of financial accounting means? To record the business transactions. So whatever transactions are there, you will record them neatly, that is following certain rules and regulations. Next, ascertaining the financial result, communication result to various parties. Meeting legal obligations means nothing but you are writing something called as for taxes. To pay the taxes also, it will be useful. Now, if you closely observe, objectives of accounting and functions of accounting are more one and same. Okay. So either you learn objectives of accounting, and if they ask functions also, you write the same answer. Right? Now you see which one is easy for you. Either functions are easy or objectives are easy. And if they ask the question, the same thing you have to write. Okay.
Okay, ma'am.
Now next one, advantages of financial accounting. Now suppose if you prepare accounting, what are the advantages you have? Okay. So first one is, what is the advantage you tell me? It is an aid to management in managerial control. Means what is advantage? First one, if you are preparing financial accounting, what is the advantage? In financial accounting, you'll prepare a profit and loss account statement. And suppose, what do you mean by P&L account means? Profit and loss statement. Now, when you prepare a profit and loss statement, you will get two options. Either you will get a profit or you'll get a loss. Okay. Now, suppose if you get a profit to the company, where you should invest this profit and make business grow. Suppose if you are getting loss to the business, how to handle this loss? Okay. Now, these two things will help the management to understand. And how is this possible? Only when you are preparing accounts. Okay. Now, aid to management means it is one of the important tool to management to exercise managerial control. Now, what is this managerial control is? This one only. If I get a profit, where to invest? If you are getting loss, where to, how to handle the loss. Okay. And next one is maintaining of records. Now, if you maintain all the records, what you'll understand? Have you visited any government office?
No, ma'am.
If you visit a government office, what you'll find now, you find different types of racks. In each racks, you'll find different files. Now, what does these files will do is, in case suddenly, if you have any doubt, all these files and records will help you to solve the case. Now, have you seen movies? Suppose in police station, if they wanted to crack any case, usually they'll go to the files room or store room and they'll start checking files, previous files. Have you seen any such sort of movies? Especially in case of any murder happened, if they wanted to refer any previous cases of similar nature, what they usually police people will do is, they'll go to storeroom. From storeroom, they'll remove all the files and they'll start checking. Okay. Now, what is the resemblance between this and that is? What is the resemblance between this and that is? here maintaining records means if you maintain all the records and when you are running a business, suddenly if you got any doubt or if you want to verify any entry, suppose if you purchased any items from certain vendor and suddenly you got a doubt that, okay, last year, the same time, how much did he tell the pen's price? Okay, that if you want to cross check, then these records will be helpful. And last year you purchased A4 size bundles from XYZ company. And this year he's telling some price. And if you wanted to quickly recheck what has happened last year means these records will be helpful. Okay. And next last one is closure of the business. Suppose if you want to sell the business. Now I am running a business. For example, if I am running a computer business and I'm getting losses. And how did I come to know that I'm getting losses? Because I'm preparing an accounts and in the accounts it showed that my profit and loss account is running in loss, right? Now I tried to handle the loss, but I am unable to handle it. So finally what I have decided is to sell the business. Now suppose if I'm ready, open offer that I'm ready to sell my the business. Now the first thing what you'll ask me, and you came to purchase my business. Now the first thing what you'll ask me,
Can I buy have a business?
no, you have a lot of money. Okay. I am
No.
ready to sell my business. You are ready to purchase the business. Now, suppose you came, you saw the business, you liked it. And the first question, what you'll ask the owner of the company?
I have no idea, ma'am.
No, suppose if you come and want to purchase, first thing what you'll ask, why you are selling the business?
Ah,
Yes.
yes,
So
ma'am.
what will I tell? Because my business is running in losses. Okay. Then you'll tell, okay, show me your financial statements. Let me check. So you'll check all the financial statements and come to a conclusion that, okay, you're making losses. So that is the reason you're selling. Okay. Then you'll try to find out what is the reason. And finally, what you'll tell is because your business is running in losses, your business value is 1 crore. Because it is running in losses, what I'll do is I'll purchase it only for 50 lakhs. You'll tell and you'll purchase it for half the rate. Is it the same thing you'll do?
Yes, ma'am.
Okay. So from 1 crore to 50 lakhs, how could you bargain because accounts are ready for you? Okay.
Mm.
So when you are preparing a financial account, what is the advantage is, first one, you'll come to, generally, it doesn't mean that you should write all these points. Generally, you think that, suppose if you are preparing accounts, what are the advantages? First one advantage is you'll come to know whether business is running in profit or loss. If business is running in profit, where to invest profit will be helpful. If business is running in loss, how I should control the loss. Okay. And next one, for any past reference also, accounts will be useful. And suppose if you want to sell the business to any opposite party, so these accounts will speak about your business, right? So that is why we call financial accountancy is the language of the business. Even if the owner of the business does not talk to anyone also, but if you see the financial statements, you will understand that, okay, these are the financial statement and this is the financial position of the business. Okay. Now tomorrow what I do is I'll take one company financial statements and I'll show you, then you'll understand it more clearly. Okay.
Okay, ma'am.
Now next one is, what are the limitations of financial
Limitations.
accounting? Okay. Now what is the limitations of financial accounting? You tell me. What are the drawbacks of accounting?
One second, ma'am. Limitations.
Okay. So financial accounting record only non-monetary will not record non-monetary transactions. Is it true or not?
Yes, ma'am.
Okay. So
True.
it records only monetary transactions. But what about the non-monetary transactions? For example, the employee is there. He is working from past 30 years in your company. Because of his working style only, you are getting profit. Then is anything provision provided in books of accounts?
No, ma'am.
His sincerity, will you write in accounts? You will not write.
No,
Okay.
no.
Next one, there is one customer to the business. Every year he'll come and he'll make 1 lakh business. So to the company. So you are recording that 1 lakh, but are you recording the loyalty of the customers in books of accounts?
No, ma'am.
No. So these things which are non-monetary in nature, that you are not actually recording in books of accounts. So that is one limitation. Okay. And next one is fluctuation of prices are not considered. Fluctuation of prices means, suppose this is accountancy book. Today, what is today's date? 2nd May.
Second, ma'am.
I purchased a pen worth 10 rupees. I'll write here 10 rupees. Okay. In the books of accounts. And tomorrow, what happens is suddenly this 10 rupees pen will come down to 9 rupees. Okay. Now again, I'll not go to 2nd May and I'll not change it as 9 rupees. Do you agree with this?
Yes, ma'am. I agree with that.
Okay. Now you'll go to the previous date and you'll write here current price here.
Yes, ma'am.
You'll not write no. Well, okay, I'll tell you. Suppose today you purchased a flat. Okay. The flat cost is 50 lakhs. Okay. Now after 1 year, the flat has increased to 60 lakhs. In books of accounts, what you will show is, you will show only 50 lakhs. But today current market price is 60 lakhs. You will not cancel this 50 and you won't write 60 lakhs. Is the concept clear to you?
Yes, ma'am.
Okay,
Clear.
this process will not do it in the books of accounts. That is called as fluctuation in prices are not considered. I'll tell you your style of example. Now, for example, what is current iPhone version now?
16.
I16. Okay, what will be the I16 price?
Uh, Approximately 1 lakh.
Okay, I16 price in today's market, it is 1 lakh rupees. Okay. Now, today you purchased I16 lakh for 1 lakh. You suppose you imagine. Now, what it is? 2nd May.
May.
Okay. 2nd May for business, you purchase I16. Its cost is 1 lakh. Now, exactly after 2 months, that is on 2nd July, the iPhone people, Apple people, they have launched I17. Okay. And the I17 cost is somewhere around 1,20,000. And on 2nd July, this I16 cost, because its model has become old, earlier you purchased it for 1 lakh, now it came to 80,000. Are you following?
Yes, ma'am.
Now, will you go previously to 2nd May and you will cut off this and will you write 80,000 here?
No, ma'am.
You'll not write, no?
No, no, no.
No, isn't it? Because already you purchased it back 2nd May. You already raised a receipt for that. You purchased it for 1 lakh. Because today's market price is 80,000, you'll go and cut off and write 80,000.
No, ma'am. We
No,
will
you'll
not
not
take.
write, no? Same thing with flat also. You purchased 50 lakhs. After 1 year, it will be 60 lakhs. You can't go to previous date, cut off this 50 lakhs and you can't write 60 lakhs. Okay, so this is what it was saying. Fluctuation in prices are not considered. Any increase in price, any decrease in price, you can't change the figures. That is what they are taking. You can change the figures, but when you will change, when you are selling this iPhone, you can change. When you are selling this flat, you can change. But if you are not selling it, you have to maintain the price, whatever you have purchased. That is what accountancy says. Okay.
Okay, ma'am.
Next one is unrealistic accounting information. It will not consider. Fail the test of managerial performance. Okay. Now, fails the test of managerial performance means, suppose you have a car business. Okay. And your target is every month you have to sell 1 car. Okay.
Okay,
And
ma'am.
every month you have to sell 1 premium car. That is your car showroom target. Now, suppose this month you didn't sell the car. If you sell the car, you will be getting a profit of 10,000. If you don't sell the car, you will be getting a loss of 10,000. Are you following?
Yes, ma'am. I'm got getting.
Okay, if you have a car showroom, every month you have to sell one car. If you sell one car, you'll get a profit of 10,000. If you don't sell a car, you will get a loss of 10,000. Now, this month, what has happened is you did not sell the car. You got lost 10,000. You are recording 10,000 loss. Now, why you are unable to sell it? Because the manager was handling the showroom, okay, he got sick, and because of that reason, he couldn't sell the car. Now in the books of accounts, okay, what you will write? Because manager got fever, so for that reason I got lost. Will you able to write the reason in the books of accounts?
No, ma'am. We can't write that.
What you'll write in the books of accounts? If you are getting profit, 10,000, loss 10,000. That's all. But what is the reason why you are getting loss? That reason you will not write, no? So
No,
that
ma'am.
is called as fail the test of managerial performance. Either you'll write profit or you'll write loss.
Yes.
But the reason is you cannot write, but the thing is you cannot write the reason for profit and loss. Okay. Now next one is personal bias of the accountant. Now you know Vijay Malia.
Yes, ma'am.
Okay. And one more, you know Nirav Modi.
No, ma'am.
You know Vijay Malia, no?
Yes, ma'am.
How did you come to know about Vijay Malia?
500 crores.
500 crores.
Making the losses of 500 crores, ma'am.
Okay. Now, how could he make 500 crores losses?
After selling his company, Kingfisher.
Hmm. So, do you think, actually, what has happened in the case is, in profit and loss account, now he went for a bank loan. Okay. He went to SBI.
Yes, ma'am.
Okay. So, when he went to SBI for bank loan, now, yesterday we discussed, no, if we are going for SBI and if we are asking loan, what is the first thing they'll see?
Profit and loss.
Profit and loss. So what he has done, no, he gave some money to the accountant and he said, don't show correct profit and loss, but show more profit. So what has the accountant done?
Ma'am,
What the accountant has done? He has showed more profit in the profit and loss account, right? And
right,
when
ma'am.
he showed more profit, what happened? He took that statement and went to the bank. And then finally, what has happened? Bank has seen that what happened? That false profit, and they have sanctioned the loan to Kingfisher. Okay. So here the concept is all the accounts will be in the accountant hand.
Yes, ma'am.
Yes.
Yes, ma'am. Yes, ma'am.
Right. So can he change the figures?
Yes, ma'am. He can change the figures.
And if he changes, can we identify where he has done changes?
No, ma'am.
No, isn't it? So that is one limitation of financial accounting. Personal bias of the accountant means always profit and loss account statement. There is a rule that you have to prepare as per rules and regulations. But as per rules and regulations means sometimes if accountant does any fraud, we are unable to identify. That is the personal bias of the accountant. Okay. And next one is historical in nature. Historical in nature means always you'll prepare financial statements based on past thing, not on current thing. Now, have you heard about CA,
Yeah.
Chartered Accountant?
No, ma'am.
You know that every year you have to prepare trading profit and loss account and balance sheet.
No, ma'am.
Okay. Now, whatever the organization may be, okay, either it may be a small business or large business, whatever it may be, every year, okay, you know what is the accounting period, accounting year?
1980?
No. What is the calendar year? When does it start?
I don't know, ma'am.
Okay. Now calendar, when does it starts from? January 1st. Okay. When it ends?
December
December
31st.
December 31st. So it starts from January and ends it December 31st. This is called as calendar year. Okay. But in accountancy, it starts from 1st April. And when does it close? On 31st March.
March.
And this is called as accounting year.
Yeah.
Okay. Now, this is usually what you see in the calendar. But usually, this is what actually the accountant will follow. What they follow is on 1st April, okay, they'll start a new book. What is that book name called as?
Bookkeeping.
They'll start with the bookkeeping. Okay. And after bookkeeping, 1st April. Now on 31st March, what they do is looking into bookkeeping, what they'll do? They'll prepare journal, ledger, trial balance, that is financial statements, that is trading, profit and loss account, and balance sheet. When
Balance
they
sheet.
prepare all this on 31st March. When they are going to start on
April 1st.
1st April. Now today actually we are doing manually, but there is a software called as Tally. Now what does this do is when you're entering journal only, back end, it will prepare ledger, trial balance, balance sheet, everything it will prepare simultaneously. So that is not a big task now. Earlier how it was is everything we have to prepare it manually. But now it has been reduced. Just if you are putting journal entry, it will automatically calculate this and it will give you the answer. Okay. And that package name is called as Tally.
Tally.
Okay. Now coming to the point is, whatever the organization is there, whether it is a big organization or whether it is a small organization, whether it is a school, whether it is a college, whether it is a company, whether it is a manufacturing unit, whether it is in a hospital, anything. Okay, if it is a any serving society or if it is an NGO, whatever it may be, they have to follow this thing only. Okay, if they are doing business means they have to follow this. Now, every organization on 31st March, what they do, they'll close books of accounts. Okay, what do you mean by closing of books of accounts means what? They'll prepare trading account, profit and loss account, and balance sheet. Now, after preparing, what they will do is this, they will send it to CA. Now, who is known as CA? CA is called as a chartered accountant. Okay. Now, what does this chartered accountant will do is, he will verify all the things. So, all the things means what? He will verify your bookkeeping. He'll verify your journal. He'll verify your ledger. He'll verify your trading account. He will see each and every voucher, each and every receipt. Okay, he'll check. And next one, whether did you prepare trading account correctly? Whether did you prepare profit and loss account correctly? Whether you have done balance sheet correctly or not. So he's going to check everything. Now the accountant, what he'll do is, once he closes balance sheet, he will forward all the statements to chartered accountant. Chartered accountant, what does he'll do? He'll verify everything, okay, whether you have done correctly or not. If everything is correct, what he will do is, he'll put a stamp and he'll put his signature on balance sheet. Tomorrow I'll show even this also. Okay. Now, once he put this, these accounts are called as audited accounts.
Audited accounts.
Okay. And on audited accounts only, we'll pay the tax. Okay. Now, every year we have to pay the tax, no? So how we'll pay the tax? Based on this. So every company will pay the tax. Now, why we are discussing these points is, now when CA is checking something, suddenly he find that accountant has forgot one entry here. Okay. So forgot one sales entry here. He by mistakenly omitted there. By mistakenly, he omitted there. Now, if by mistake, if he is missing anything, can we change it after 31st March?
No, ma'am.
You can't change it now. Somewhere in June or July, he forgot one entry. He prepared accounts and he kept all the books in front of CA. Now CA came to know that on July, he forgot to write one entry. Can he write that entry in July? Go back and write in July?
No, ma'am, we can't.
We can't write, right? That is the limitation. If you are missing anything in the past, you cannot make any adjustments in the present. That is one of the biggest limitations of accountancy. Okay, have you understood?
Yes, ma'am.
Okay, so historical in nature. What does it mean? In past, if you have missed anything, you cannot write it in the present, or you cannot write it in the past also. So omitted means omitted. That's all. Now we cannot change anything. That is one of the limitations of financial accounting. Now,
Accounting.
have you understood this part?
Yes, ma'am.
Okay. Now the last one is, now shall we close till here or you wanted to go further?
As you wish, ma'am.
No, I means if I explain more, will you get confusion? That is what I was asking. Okay, we'll see this last one. Okay.
Yes, ma'am.
Now, next one is how many types of accounting are there? Or it is also called accounting based on information. Now, the first one, you know, what is a financial accounting? What we prepare?
Bookkeeping,
We'll prepare bookkeeping, journal,
journal, ledger,
mm,
trial balance,
mm,
and balance sheet.
balance sheet. Before balance sheet, what we'll prepare? Trading
Trading
on
profit.
profit and
Trading on
loss,
profit and loss.
and last one is
Balance
balance sheet. And what does profit and loss account will tell?
whether it is losses or profit.
Whether company is profit or loss. And what does the balance sheet will tell?
Final transactions.
Balance sheet consists of assets and
Of
liabilities.
liabilities.
What does you mean by assets? Assets means how many properties does business have, and liabilities means how many loans the business has. Okay. This part they are going to tell. Now this part, have you understood it clearly, no?
Yes, ma'am.
Okay, so how many? This is actually branches of accounting or division of accounting based on information, or you can call it as types of accounting. Anything is okay. So how many types of accountancy are there? So the first one, what you know is financial accounting. What does financial accounting say about? It speaks about all these things, right? Now, once you get a profit and loss, okay, like we discussed, suppose if a company is getting profit, what you'll do with the profit?
Expand business.
Expand business. Now, before expansion, you'll do a little bit survey.
Yes, ma'am.
Okay, what you'll do? Suppose you got 1 lakh profit this time. With this 1 lakh, you wanted to open a new shop. Now, before you open a new shop, you will do survey in an area. Array here, whether I should open in this gully or next gully I should open. If I open a shop, here will I get a more profit or there I'll get a more profit. It is on roadside or it is within inside the road. You'll try to verify all those things, no?
Yes,
Yes.
ma'am.
And if I keep an investment, when I'll be getting my investment back? Will the customers will come to me or not? Okay. So this part is called as management accounting.
Accounting.
Okay. What does management accounting say? If you are getting a profit to the business, that profit, if you wanted to invest somewhere, okay, it will help you how to invest, where to invest, how much to invest. Okay, that is what called as management accounting. Understood?
Yes, ma'am.
Okay. Now next one is Now, suppose if you are getting loss to the business. Okay. Now, suppose if your business is running in loss, now the first thing what you will do?
Profit or loss?
What you will do?
Ma'am, can you repeat the question?
If you are getting loss to the business, what you will do?
Mm, I will check a customer satisfaction, ma'am.
Okay. From your side, what you will do?
Service.
You'll do survey in your organization. What you will do?
The customers
For
are
example.
happy.
Okay, for example, if you are manufacturing Samsung mobiles, okay, when you are manufacturing Samsung mobiles, suddenly your accountant came and asked that, sir, our Samsung mobiles are cost 10,000 rupees, for example, okay, and suddenly a competitor came into the market, for example, what we call this Xiaomi, something came into the business. They are selling same brand phone for 9,000. Okay,
Yes, ma'am.
are you following, Zishan?
Yes, ma'am, I'm following.
Okay, so you are manufacturing Samsung phone and you are selling it for 10,000 in the market. So till yesterday it was nice, fine, very good. But in today market, what happened is suddenly Xiaomi, they launched their mobiles, same brand, same features, everything is same like your phone, but they are selling it for 9,000. Now what you will do?
I will add more features, ma'am.
Okay, you'll add more features. And what about the cost?
I'll keep discounts.
You'll keep risk and maximum you'll try to reduce the price to 9,000 so that it should be on par with your competitors.
Yes, ma'am.
Okay. Now, if you want to reduce your mobile cost from 10,000 to 9,000, you will try to check where I'm spending more so that I can reduce my cost.
Yes, ma'am.
Yes.
Yes,
So
ma'am.
telling about where are the chances to reduce your cost so that you can reduce your final price of the product and you can be on par with your competitors. So that is called
Uh,
as what?
cost accounting.
Cost accounting. What does cost accounting says? In business, how much expenditure you are spending. In that expenditure, where you are spending, how much you are spending, and is there any chance to reduce that spending so that you can finally reduce your cost price of the final product. Okay,
Okay, ma'am.
right. Next type of accounting is what? Human resource accounting. Now, what does this say is, in your organization, what type of employees you have to recruit? Now, if you are having Samsung mobiles, every month your target is at least to sell 100 mobile phones in the market. Now, what you'll do? You'll appoint good sales executives.
Yes, ma'am.
Okay. Now, for example, car showroom is there. You are having a car showroom. Every month your target is to at least to sell 10 cars in the market. If you sell 10 cars, you are getting profit. If you are
Profit.
selling 9 cars, you can't get a profit. So to sell 10 cars in the market, you'll appoint efficient sales executives,
Yes, ma'am.
right? So
Right.
what type of, if you select wrong executive, what will happen?
It will be in losses, ma'am.
Losses. So what does human resource accounting say that what type of employees you have to recruit so that your business will be getting profit?
Profit.
Okay, that what does it that is called as human resource accounting.
Man, accounting.
Next, last one is inflation accounting. Inflation accounting means suppose we'll come to same one, mobile phones. When you are coming to the mobile phones, you are having a manufacturing unit. Suddenly what has happened is your whoever material supplier is there, he'll tell that now this time price has increased, so I'm increasing the cost. Now suddenly what will happen if the material cost is increased? What will happen to your Samsung mobile cost?
It will be in losses, ma'am.
It will be more. Now earlier 10,000 was the price. Now suddenly the person who is supplying material to you, What does he say? No, this time it is not possible. We are increasing the cost. So your mobile cost will go from 10,000 to 11,000,
Yes, ma'am. It may be
right?
12,000 also.
12,000 also, right? Now, suppose if your material cost is increasing continuously, and if you sell your mobile phone for 12,000, but your competitor is selling only for 9,000. Okay? So when your competitor is selling for 9,000, but your supplier said that I am increasing the cost, the mobile cost will become 12,000. Now, immediately what you want? I have to
Yeah.
reduce the cost and sell my mobile phone only for 9,000. Is it true?
We will be in losses, ma'am.
You'll be in losses. So what does inflation accounting say is, suddenly if your prices are increasing, if your material cost is increasing, if your labor cost is increasing, if your water cost is increasing, if your fuel cost is increasing, and you'll see, have you seen that? Suddenly if lorry persons, if they're on strike, what will happen to vegetables price?
No, it will increase the prices, ma'am.
Increase. Now suppose in Dubai or surrounding areas, if there is any war, what will happen to our petrol prices?
It will be on skies, ma'am.
It will increase, right? So that is called as inflation. Now, if we
Yes.
go on increasing the petrol prices, also will be unable to buy now. So
Mhm.
we should see that at least transportation cost is reduced so that the prices are fair. Now, what does this inflation accounting says is, if prices are increasing continuously, at that time, if you want to get profit, what are the immediate steps you have to take so that you'll be on par with your competitors and will be getting a profit.
Profit.
Okay.
Okay, ma'am.
So that is called as inflation accounting. So how many
Accounting.
types of accounting are there? Financial accounting. What
Management
does
accounting.
management accounting says? If you are getting profit, where to invest profit? What does cost accounting says? If you are getting loss, how to
Loss.
reduce your loss by reducing expenditure. What does human resource accounting says? What type of employees you have to recruit in your organization so that you'll be getting profit. And what does inflation accounting says? If prices are increasing continuously, how to control those prices and maintain your profit. Okay.
Okay, ma'am.